Hello students, through this video clip, we are gonna understand the markups and then how to express the markup in dollar amount and in percentage, and how to set up the target sales using the cost budget and the target profit. Okay, Custom Graphics is a Skyward's 3D printing company that is on a wide variety of design and printing jobs. The owner of the company, Janet Sullivan, prepares the bids for most jobs. Her cost budget based on the absorption method for 2001 follows. We have all the information related to cost, material cost, labor cost, the overhead, that means the manufacturing overhead, like indirect production cost, variable and fixed. And then total production cost of job, and selling and administrative expense in variable and the fixed cost, and then we come up with the total cost like this. So the Solomon has a target profit 250,000. That is the target profit to get the target sales starting from the total budget. So we are going to go backward, starting from the cost but total cost budget, that information we are given. Here, the total cost budget is based on this schedule, 1,250,000. Then target profit, the Solomon has is 250,000. So it's easy to set up the target sales. Always starting from the cost, and then we add up some target profit, and then we come up with the target sales. It's totally the exactly backward. So we just sum up this cost and the profit. Now the reason why we calculate this target sales and then we calculate this each cost budget, instead we will measure the target markup in dollar amount and target markup in percentage from the target sales, the difference between the target sales and each cost. So the material plus labor, we just collect 350 and 250. And then variable production cost, we want to know the target markup and the target markup in percentage in each cost budget, so that we can identify the relationship each cost and the sales. Then variable production cost of job is 350,000 and labor 250, that are the variable cost. And then what else? That 300,000, the manufacturing overhead. What about this variable? No, we are collecting only the production cost of a job. So we collect these two variable, the direct material and direct labor and manufacturing overhead. So 900,000. And then total production cost of a job, we already given this, 1,050,000. All variable cost. Now we include this variable as well as the variable selling and administrative expense. Now we finished the setup. Then we should calculate the target markup. How do you calculate the target markup? Target markup is the difference between the target sales and the each cost. That's correct. So 1,500,000 minus the material plus labor. Also, target sales minus variable production cost. We calculate this target markup so that we can identify the relationship between each cost and the target sales. Finally, the all variable cost of the target sales minus its variable cost. And then the same way, target markup for all the cost budget is 250. Then let's calculate the target markup. Target markup in percentage. In percentage is the starting point. You have to be careful when you calculate the target markup. You should use the cost, not the sales. The base is the cost because we want to measure the markup starting from the cost. How much we have the have the buffer or the markup from the cost to reach the sales. So we use not sales, be careful, not sales, but the cost. So 150% is the markup starting from the material plus the labor cost to reach these sales. Okay. Also, the same way, 66% the target markup in percentage of the variable production cost of job. Then finally, the total cost as well. Okay, this is it. See you in the next video clip. Bye bye.